Hi, this is Zach Mir with the weekend edition of the Bulletin Board Heroes here at Vox Market. It's Sunday, the 12th of December. Starting off with the long shot, and I suppose with the Bulletin Board Heroes, many of the contenders are long shots, but it might just be the case that AO World has broken its resistance line there from the end of September, say roughly around the 95 pence level. Above that, we could see the shares push up towards the top of the last gap, around £1.20. Over the next month or 6 weeks or so. So above the 95 area, looking for 120 as a best case scenario. Moving along to something which is possibly less fraught, and that would be Avacta, if I can get it up on the screen. Here we can see that shares have had something of a wobbly ride in the recent past, trying to break that line of resistance there from back in June and sort of breaking it and then using it as support, which is often the case. Here you can see though that at least while we're above £1.10, probably on an end of day close basis, we could see the shares head back to retest the mid-November peak around £1.35. But if you're cautious, maybe you want to see the stock close once again on the right side of the 50-day moving average at £1.16 before deeming them strong enough to rally again. Onto a stock which is not quite so high profile, but maybe making a comeback, African Pioneer. Here we can see the shares right on the bottom, let's say, of the recent range, and at the sort of the lows. Got the shares in oversold territory, so it may be the case that if we can break back above the 2.3, 2.4 pence area, then African Pioneer could be back on for a 3 pence target, but obviously not a great looking situation at the moment. Rather easier to fathom at the moment is Braveheart, where we still have clever Trevor Brown in charge. A rising trend channel there from the end of, the beginning of August actually, and floor of the channel there, just about the shares just bouncing off that during the end of the week or on Thursday. Above that 30 pence area on an end of day close basis, we could see the stock head back to at least the 200-day moving average at 45 pence. And it's interesting that whenever the shares have been in the sort of the 25 to 30 pence area in the recent past, they have rallied towards the low 40s quite well. So we've got a reasonable range there, 25 to 45, in place for BRH. Stock which has been one of the stars of the recent past has been Conroy Gold and Natural Resources, and all the more a star given the way that has been rather for much of the year. We actually sort of opened at the high of the year around 45 pence and then more than halved, but a decent rebound with a break of that January resistance line and the 50-day moving average at 22 pence at the turn of the month, and it could still be the case that my rather optimistic target there at the top of the March 2019 trend channel at 55 pence may be hit as soon as the end of next month. Nice little mid-move consolidation happening at the latter part of this week, or last week rather, and decent green bars there in the volume indicator window, so that does suggest that we could have one more go at the 50 to 55 pence area over the near term, which would be great. On to Galileo, which pumped out good news over last week as well. And here the theory is that we're in a broadening triangle, which is based around 0.75. Initial target here, the 50-day moving average at 1.1 pence, which would be nice. Best case scenario target up to 1.8, maybe over the next 2 to 3 months, if the implications of the latest news finally kick in with the market. Moving along to a stock which I haven't looked at for a while, iNexus Global. Here, another one that's been in the sort of African Pioneer type of thing, just right at the lows there over the early part of last week, and looks as though there's a reasonable response there, perhaps seeing the shares up to 7 pence by the end of the next month, which is the top of that triangle drawn from September, and also the 200-day moving average at 7.5 pence. So let's see how we go there. Obviously, we don't want to see the stock back below 4.5 pence anytime soon. On to Oracle Power, which has finally delivered in terms of being, delivered already on the fundamental front with the hydrogen initiative, but has also delivered on the technical front, breaking that line of resistance from February and the 200-day moving average. Perhaps that's even more important, around 0.46. Above 0.46, we're looking for the shares to hit 0.8 pence, which is an October 2020 resistance line projection. And that broadening triangle target would be the best case scenario, and one that's been promised for quite some time. The other point to note is the way that even from September and October we were getting bullish divergence in the RSI window, and that has finally kicked in a positive way for the shares. And as I said, above the 200-day line, 0.8 would be a pretty decent result for holders of the stock. On to Omega Diagnostics, which has been, let's say, rather difficult in the recent past. Just wanted to see the chart here in the sense that we've got the shares right on this relatively obscure line of support from the end of December last year. That suggests that at least 21 pence, 22 pence is critical to the stock. Don't really want to see the shares break below that on an end-of-day close basis. The last gap down has not been broken in terms of the bottom of the gap there at 35 pence, which was disappointing. So everything here really depending on, let's say, 21 pence holding on an end-of-day close basis. Otherwise, there is a risk of further declines towards maybe the mid-teens area, which was support a long time ago, back a couple of years ago for the shares. Moving on to a stock which has appeared in the Sunday Express today, which was good news for Okio, I suppose. Here we've got the shares in a rising trend channel from July, support around the 6 pence level. And while we hold above 6 pence and the 50 and 200-day moving averages around that zone, we could see the shares eventually hit 12 pence at the July resistance line projection. Something we've seen in a couple of stocks of late as well, sort of something critical about that period in the summer in terms of projecting potential price action. A couple of stocks to go now. First one is Venture Life, which I haven't looked at very much, but could be one of those situations where we're completely bombed out. RSI there now around the 20 levels. That's the most the shares that most oversold the shares have been since back in the autumn of 2019, and obviously that was before the big rally that we had then. If you are cautious though of the shares, you might want to see, let's say, a momentum signal, which would be an end of day close through the midweek resistance there around 36 pence, and then you can target 40 pence plus. So one to watch maybe in terms of a potential bounce back over the near term. Finishing off with Extract Resources, which had its big update during the week. I think the shares were up 25% on Thursday. The only thing here is that we really need to break this 6 pence zone. We tried to nudge through on Friday, but weren't able to sustain that. But at least while we're above the 50-day moving average at 5.2 pence, the share is looking to be ready for a breakout. And obviously, if we can wait for any end-of-day close through 6 pence, that might be the trigger to take us up towards retesting the initial resistance of this year just through 9 pence, something that could happen maybe by the end of next month. That's it for me today. More updates tomorrow.